Good morning, ladies and gentlemen. Welcome to Bank of Jamaica's quarterly monetary policy report press conference. I trust that you all had a productive Labor Day. We have with us this morning Governor Richard Biles, Senior Deputy Governor Dr. Wayne Robinson, and Deputy Governors Natalie Haynes, Karen Chinqui-Aiken, Maureen Sims, and Robert Stennett. This morning's program will follow the usual format with Governor Biles discussing the bank's latest monetary policy decision in the context of the bank's outlook for inflation and the overall economy, against the background of the economy's performance for the last quarter, all within the context of yet another wave of COVID-19 and Russia's invasion of Ukraine. Following the governor's presentation, the floor will be open to facilitate the question and answer session. Please go ahead, Governor.
Thank you, Melanie. Good morning, ladies and gentlemen. The Jamaican economy has been doing well. Real GDP grew faster in the December 21 quarter than in the preceding quarter, and there are signs that the economy continued to expand in the March 22 quarter. In particular, Statin reported that the unemployment rate fell to a historic low in January 2022, an exceptional performance by any measure. However, the economy is not yet out of the woods. Right after we thought that the COVID-19 pandemic had receded, the world was rocked by the invasion of Ukraine by Russia. This conflict has fueled further significant increases in international commodity prices and has contributed to a substantial rise in global and domestic inflation. We're also seeing the emergence in Jamaica of another wave of the COVID-19 virus, as infections and the positivity rate have been rising. It is in this context that the central bank remains concerned about inflation, which has continued to track significantly above the upper end of the bank's 4 to 6% inflation range. There could be some respite in sight, however, provided that the geopolitical tensions do not escalate. While already high commodity prices are expected to increase further over the next few months, the global consensus forecasts indicate that these prices will fall in the second half of 2022, influencing a decline in inflation amongst Jamaica's trading partners. Jamaica's inflation is expected to follow a similar pattern, rising in May and June, but falling in the second half of the year. After carefully considering all the risks around this outlook, it is our view that Bank of Jamaica should continue its program of monetary tightening until we have seen the projected turn in inflation materialize. With this brief background, I'll now speak in further detail to the bank's latest monetary policy decisions. The bank's Monetary Policy Committee, its MPC, met on the 12th, 13th, and 18th of May this year and voted to increase the policy rate by a further 50 basis points to 5%, effective the 20th of May 2022. The committee also decided to continue pursuing other measures to contain Jamaica dollar liquidity expansion and to maintain relative stability in the foreign exchange market. The MPC noted that the bank's strong international reserves reinforces its ability to support the foreign exchange market as needed. This current decision has resulted in a cumulative increase in the policy rate of 450 basis points since October of last year and has taken the policy rate close to the level that the committee considers appropriate. Complementing these policy rate increases, the bank sold approximately $552 million to the foreign exchange market since October of last year, more than twice the amount of foreign exchange sold with the previous corresponding period. In addition, the bank adjusted the net open position limits for deposit-taking institutions and has kept Jamaican dollar liquidity very tight. These policy actions contributed to the maintenance of stability in the exchange rate since the start of November last year and have been critical in preventing inflation rising even further than it has. The policy actions have also led deposit-taking institutions to commence adjusting interest rates on deposits and on loans. The bank's current decision is based on its forecast for further increases in inflation over the next 2 months before inflation starts to decline. This forecast is, however, conditional on our assumption that tensions between Russia and Ukraine do not escalate and inflation amongst Jamaica's trading partners begin to fall. The bank expects that these measures will continue to cause interest rates on deposits and loans to rise further, making savings in Jamaican dollars more attractive relative to foreign currency assets and borrowing in Jamaican dollars more expensive. In turn, these measures will help to reduce the demand for foreign currency, leading to continued stability in the exchange rate, and will reduce demand in the economy generally, limiting the ability of businesses to pass on price increases to consumers. Let me now go into more detail about recent developments in inflation and the inflation outlook. The inflation rate for the 12-month period leading up to April 2022, as released last Tuesday by the Statistical Institute of Jamaica, was 11.8%, representing the 9th consecutive month that inflation has been above the bank's target range of 4 to 6%. The bank assesses that the direct and second-round impact of the shock of international commodity prices accounted for approximately 75% of domestic inflation in April. Looking ahead, inflation is projected to peak in a range of 12 to 15% by June of this year, and to fall within the target range of 4 to 6% by June of next year, consistent with the projections for a decline in international grain and energy prices during that period, and consistent with the bank's tighter monetary policy position. The near-term risks to the inflation forecast are assessed to be skewed to the upside, which means that actual inflation could be higher than the forecast. The factors that could cause higher inflation include a worsening in supply chain disruptions and even higher commodity prices should the Russia-Ukraine conflict deteriorate. The rebound of the economy and the demand that this brings for labor may also result in upward movements in wages and hence further upward movements in prices. On the downside, weaker than expected global growth could negatively impact domestic demand. Turning to the outlook for the Jamaican economy, the most recent real GDP data published by Statin continues to show improving economic activity, as real GDP grew even faster in the December 21 quarter compared to what we observed in the September 21 quarter. For the year 21-22, the bank expects real GDP growth to be in a range of 7 to 10%. The labor market performance has also been exceptional, with the latest data from Statin showing the unemployment rate falling to a historic low of 6.2% in January of 2022. Looking ahead to financial year 22-23, real GDP growth is projected to moderate in a range of 2 to 4%. The bank expects that this GDP growth will continue to be driven by the services industry, particularly tourism. Forecast also assumes that production at one of Jamaica's main aluminum plants, which has been temporarily closed, will resume operations by June of this year. The risk to the growth forecasts are skewed to the downside, suggesting the possibility of slower growth. Growth in tourist arrivals and related activities could be lower than projected, given the possibility of a fifth wave of the COVID-19 virus and the impact of efforts to control it, both internally as well as externally. External demand also could be lower than anticipated due to the Russia-Ukraine conflict. The prospects for severe weather in the context of the approaching hurricane season and climate change also pose a downside risk to GDP growth. Finally, there is a risk that domestic consumption could be adversely affected by the high inflation rate we have experienced in the last 6 months. Turning to other developments, since the start of the year, the foreign exchange market has remained relatively stable, reflecting in part the actions taken by the bank in response to the higher than targeted inflation. Notwithstanding these actions, at May 17 of this year, Jamaica's gross international reserves remained substantial, amounting to approximately US 4.3 billion. The bank projects that the gross reserves will continue to remain adequate in the medium term. The deposit-taking institutions' balance sheets have remained adequately capitalized and in compliance with prudent liquidity standards. At the same time, non-performing loans remain well below our threshold for concern and continue to be fully provided for by the deposit-taking institutions. All these indicators highlight the general stability in the financial system. Private sector credit provided by DTIs has been growing, but at a relatively slow pace, reflecting the lagged effect of the pandemic on credit demand, particularly from businesses. Ladies and gentlemen, in concluding, I wish to reaffirm the Bank of Jamaica's commitment to using all the tools within its powers to keep prices stable, including making Jamaican dollar assets more attractive, keeping a tight lid on liquidity, and maintaining stability in the foreign exchange market. The bank will continue to closely monitor the global and domestic economic environment and base future policy decisions on incoming data. Thank you, and I have with me, as was previously announced, several of our deputy governors, which will help to answer your questions. Back to you, Melanie.
Thank you, Governor. Ladies and gentlemen, the raise your hand feature is available for you to ask your questions, as well as the chat feature. Kindly identify yourself and the organization that you represent prior to asking your questions. Does anyone have any questions? Please go ahead, Al Edwards.
Al, you're muted.
Can you hear me now?
Yes.
Hi, good morning, Governor. How do you do?
Morning, Al. Good.
Governor, I'm going to put you on the spot with this opening over, and I hope you'll forgive me and you can be very forthright. Governor, do you feel, given what has been said in the States with Ben Bernanke about Powell, what's been said in the US with Andrew Bailey, do you think you moved expeditiously to put in measures in place to curb inflation? The question now being asked is, did these central bankers move quickly enough? And no doubt you've seen the response to that, but I just really want to get your take on that.
Well, it's hard for me to second guess the Fed chairman. Just to say, we moved from October of last year, and in our best judgment, we had to move early and move pretty strongly. The Fed's position may be a bit different. I don't have access to the data that they see, so I would be reluctant to second guess that decision. I don't know whether, Wayne, you may want to comment on that question too.
Yes. Thanks, Governor. Good morning, everyone. As the governor said, just to underscore that we had to act early in a small open economy that's very vulnerable to these external shocks. The US economy, they were looking at a different mix. One, recall that inflation, although it was picking up, it was not at that time significantly above their target range. They're also keeping a close eye on the labor market. Of course, the jury is out whether or not they waited too late. We will see. But the important thing is that, I mean, we had signaled when we had started to move that we were expecting these central banks to also begin to move, certainly by early this year, which is actually what we saw.
Wayne, do you realize that Ben Bernanke said that Powell moved too late? Did you see that?
Yes. And the Fed chair in his press conference did respond to that, going through the chronology of issues that he was looking at, which I summarized for you.
Okay. A follow-up question. Did you see that the head of the IMF recently called for food prices and energy prices to be subsidized by governments? And what are your thoughts on that?
Well, I would say, giving assistance to persons in this period is important, without doubt. What we need to be careful of is the kind of assistance that is given, that when inflation recedes and we get back to a normal state of inflation, are those assistances baked in and hard to remove? So if you give a subsidy and then 1 year later prices come down, do you take away that subsidy? It's very difficult to do that. So there's another way, which is to give subsidies or special focused assistances to persons or to sectors for a specific period of time, 4 months, 6 months, 8 months, so that everybody knows up front that it is temporary and that it expires. Because if you leave those subsidies in place, that itself is a burden on the fiscal and could restrain us from achieving what we want to achieve by 2028, which is 60% debt to GDP.
Thank you, Governor.
Thank you, gentlemen. Dashan, would you like to go ahead with your question?
Good morning, Governor.
Good morning, Dashan.
In the MPC release last week, 2 things or 3 things jumped out at me immediately, and you mentioned them all. The first thing that jumped out at me was the MPC believing the current key policy rate from the BOJ is close to the appropriate level. And to me, that would suggest that increases in the near future in the interest rate will be slower than over the last 8 months, in which it has gone up by 10-fold, right? But what does that word appropriate mean? Is it appropriate to tamper down inflation without pushing the economy in a recession, or just to tamper down inflation alone?
Right, so good question.
And I'll ask you the other after you answer that.
Right, good question, and I will venture a response and ask Robert to step in after. We have a concept in the bank which we call a neutral rate, and that's a rate at which we're right on the edge of either stimulating growth or retarding growth. And what we're saying is that we are within the proximity of that rate. And so we're very open about it, that we have come a long way. We still have a little way maybe to go, depending on what the incoming data says to us. But we are closer to that neutral position than we were 6 months ago. Robert, I don't know if you want to elaborate a little more on that.
Hey, thanks, Governor. Good morning, everybody. Well, I think the governor has pretty much covered the issues. The neutral rate is not something that we can observe, so that this is something that we estimate internally. And as the governor said, the neutral rate really represents that level of real interest rate that is neither retarding economic growth nor stimulating economic growth. Our future decisions about the policy rate is going to be guided by how inflation is evolving and how the factors that are driving inflation are evolving. So as the governor has said in his speech, there are key risks that we continue to monitor, not the least of which is the very fragile situation in external commodity markets that have the potential to push in inflation and inflation expectations higher. So while based on current conditions, we believe that we are pretty close to the neutral rate, the incoming data and the confluence of circumstances that face the bank will make us determine what next to do. So this is we're going to be going into a period of a highly conditional decision making based on what we see evolving. But as of now, we feel pretty comfortable that the adjustments that we have made since October to now have taken us closer to where we would be comfortable than before. Thank you so much.
I kind of a follow-up on that before. Let me be facetious and ask, what is that neutral rate? And that's why I say I'm being facetious. But what is that neutral rate? And does the BOJ believe, as some people believe, that it was overly aggressive in terms of increasing interest rates over the last few months?
Well, the BOJ has published a discussion paper on its website, Dashan, that all are invited to look at. We have used a variety of methods to estimate this neutral rate. And the clear indication that came out is that the neutral rate for Jamaica, as for many other countries, is highly variable. And so our best estimate puts it in the region of plus or minus 2.6 percentage points. What this means is that if we are at long-run inflation of 5%, our neutral rate can either be, in nominal terms, roughly 2.5% or roughly 7.5%, you know. So it lies in the range of between 2.5 roughly. I mean, I'm just abstracting from the 2.6, calling it 2.5. In the range 2.5 in nominal terms of 7.5. So monetary policy rate of 5% puts you very in the middle of that estimated range that we refer to. I must hasten to say, however, that we not only monitor what is happening in relation to our policy rate, but we look at the broad spectrum of interest rates in the economy, including interest rates on government bonds, treasury bills, BMIs, and so on, and on loan rates. So we consider how the mix of our policy measures are influencing broad interest rates economy-wide. And so while the policy rate is pretty close, we can also be guided by the extent to which other rates in the financial system are moving.
Dashan, I would also say that recall, we're coming from 0.5% policy rate. And so we're coming a long way. So in saying that we have moved fast, you would have to come, that's a relative comment relative to where we were before. So, 6 months ago, in September earlier, we were being very highly accommodative of growth. And that is why we brought rates down so low. But when we saw from, say, about August that inflation was on the uptick and likely to be there for a while, and that it was going to be aggressive, we had to move pretty aggressively also. And so you have to judge that 450 basis point movement since October of last year against the background that we're coming from 0.5.
Just read my last question about this, and I'll let you go to Uncle before I get to my other questions, right? Mr. Stennett, you mentioned the plus or minus 2.6%, but you seem to reference the target inflation range, 4 to 6%. Does it change with the real inflation rate being above that target by a couple of multiples, at least 2 right now at the upper end?
Yeah, thanks for that question, Dashan. The neutral rate to which I refer is a long-run measure. So the long-run inflation target for Jamaica is now 5%, which is why I use that as the benchmark. A central bank that is adjusting the economy to get inflation to long-run levels may, in fact, need to push interest rates in the economy above neutral temporarily, but in the long run, this is where interest rates should go after inflation pressures have abated.
Thank you, gentlemen. Monthly Medley, could you please go ahead with your question?
Thank you, Melanie. Good morning to you and your team, Governor. Good morning, colleagues.
Morning.
I have three easy questions, I believe, Governor. As you deliberately cut aggregate demand and decelerate growth, which is the impact, do you agree that a recession is inevitable in Jamaica and globally? There's a lot of debate about that at the moment. Does the central bank believe that your actions will inevitably lead to a recession, either in the Jamaican economy as well as globally?
Not necessarily in our case. The capacity that we have left to continue to drive growth is significant. For example, in the tourism business, I think my understanding is that the capacity that tourism is at now is approximately 70% of what the pre-pandemic capacity was. So we have some way to go in that external sector of the economy. We also have a major alumina plant that has been down. That should come back up in about June of this year. So I see those two sectors of having a very positive impact on growth throughout the rest of this year. And the tightening that we are doing should not restrain achievement of the targeted growth of 7 to 10%, or in this, up to March of this year, nor the 2 to 4% for the year 22-23. So I don't see a lot of danger in that. But nonetheless, Huntley, that is something that is a delicate path to walk. And we do give that consideration very close attention at MPC. What, if any, signs are we seeing of recession? And when you look on the labor statistics, we don't see it. When we look at the GDP outturn for December, we don't see it. So we feel pretty confident that we are not yet putting the economy at risk to the extent of putting it into a recession. Wayne, again, I don't know whether you want to add comments to that.
Yes, thanks, Governor. I mean, what I'll just say, I mean, you'd notice, Huntley, that we haven't really shifted our forecast significantly. As the Governor says, we are still looking at 2 to 4% for this fiscal year. And in calibrating these forecasts, we take into account the policy adjustments that we have made. And on balance, because most of the growth we think will come from the recovery in the tourism sector and sectors that are allied to that, we still feel that the 2 to 4% is still on. One thing you'll note that even though we have increased our policy rate, interest rates in the economy is still hugely negative. So there's still some amount of accommodation there being applied to the economy, even though we are reducing the level of the accommodation. But of course, I mean, the risk to GDP is tilted to the downside. We know that there are risks in the global economy. I mean, we've seen the slowdown in China because of the COVID lockdown, and that is affecting or exacerbating supply chains conditions there. We know that the higher inflation could affect consumption globally. So there are indeed headwinds, but these are the things that we try to balance when the MPC comes to a decision on policy rates.
And your take on the global situation in regard to stagflation leading to recession?
Whilst there are concerns about slowdown, as the governor says, we don't see that as a recession as a major risk at this point in time. In fact, if you look at most of the global forecasts, I mean, the Fed, although they are predicting a slower rate of growth, they are not yet predicting any recession. The conference board similarly as well, although they are predicting a slowdown in growth in the US economy, they are not actually predicting a recession. And in fact, if you look at the US economy in particular, their economy still remains strong. And the labor market is still very strong there. For every one unemployed person, there are 2 vacancies. So that suggests that there is some amount of room that the Fed has in terms of being able to tighten monetary policy without risking a recession. So what all central banks are trying to do now is try to engineer this sort of soft landing. And right now, we don't see a risk of recession, although there are concerns, there are headwinds. The risk to GDP is in fact tilted to the downside.
Thank you. Secondly, what are the BOJ's views on the increasing industrial relations agitation and its potential impact on inflation and the timeline for getting back to the targeted range? Well,
the bank's position is strictly an economic one. So if we go back to economics 101, if you have a rise in wages, a substantial rise, and you don't have an equivalent rise in productivity, then you do have impetus for inflation. So, I mean, that's just economics 101, and that will have to work itself out in the economy.
So you give no advice in terms of the way forward in dealing with these wage demands?
That's way above my pay grade.
Okay, Governor, I hear you. Finally from me, Governor, does the central bank have any concerns about the possibility of deteriorating loan quality as loan rates, as the interest rate rise? I know that the 2021 financial stability report had raised some concerns about declining business loan quality, even though personal household loans seem to have been good.
Yeah, my understanding is that the banks have been very careful in how they have translated the increase in our policy rate to increases in loan rates for their clients. New loans have been a little more expensive than they were before. And to the extent that there are portfolios that they consider to be robust, they have passed on some of the increases to them. But they're very sensitive that we're coming out of a pandemic period and some of the businesses are not as strong as they were pre-pandemic. But nonetheless, those policy rate increases have begun to trickle through. Maureen is with us, Maureen Sims, and I would ask her if she would want to make some comments on this. Maureen?
Yeah, thank you, Governor. I think you have addressed the issue pretty well, Governor. I don't know if there's anything else I can add to clarify that particular situation, but you know.
And the current NPLs are quite good.
Right.
Well within range of what we would consider to be comfortable.
As a matter of fact, better than that. NPLs are around 3% or thereabouts. Much ahead of what we thought it would be given the pandemic. The governor at the top of his presentation spoke about the performance for the January quarter and how encouraging that is. One of the things that really pleasantly surprised us is how well capitalized and the buffers that banks had to cushion any fallout from the economy in terms of their loan book. And while certain sectors, for example, the tourism sector, where they had to allow concessions in the form of moratoria on loans, those moratoria are by and large down to less than 1% of the loan books now, and the loans are coming back. The prospect again for those loans returning to performance or being able to perform in a sustainable way is also high. So as I said, there are green shoots ahead, and we are optimistic. We are cautiously optimistic that banks will continue to weather the storm.
Thank you.
Thank you. Al, I see your hand is still up. Do you have a new question? Okay, not hearing from Al. Dashan, you said you had additional questions. Would you like to go ahead?
Yes, I can drop one because Untley asked the recession question. But I can, the governor pointed out, and also in the MPC release last week, pointed out that the expectation is that the month-to-month inflation for the second half of the year will be lower than it had been in the last couple of months. And the governor said by June, it could peak to 12 to 15%. And then next year, June, we'll get back within the target range. But for the second half of this year, what forecast inflation is the BOJ looking at on a month-to-month basis? That the slowdown in price increases that we're expected to see in the second half of this year.
Okay, I'm going to ask Robert to back me up, but to say we are looking at reports that come out of the consensus board about commodity prices, both energy as well as grains. And the trend that we are advised is that those prices are likely to begin to retreat somewhat in the second half of the year. And, you know, those constitute, as we saw in April, almost 75% of the inflation that we experienced in April. So if those commodities start to retreat, we will begin to see a fall off in inflation. Robert, you want to dive a little deeper into this one?
Yes, Governor, thank you. So as the governor said, the forecast is heavily contingent on what is happening to grains prices and oil prices on the international market. BOJ takes advice about the prospects for these commodities from a wide variety of sources, but we add our own judgment to how we believe that they're going to evolve. So for oil prices, we project them to average above $110. This is, in a sense, a worst case scenario that we are building into these forecasts. We project them to average slightly above $110 per barrel. This is for WTI for the June quarter, which is about a 19.5% increase quarter over quarter. And that level of oil prices we expect to continue for the September quarter, which essentially is a stable level of oil prices. The view for oil prices, as we all know, that we've taken on for the June quarter is really reflecting expectations that as the world economy continues to recover, demand will continue to outpace supply, given the supply constraints that are posed by the Russia-Ukraine conflict. And of course, as the sanctions that are being placed on Russia continues to strangle supply from that region, we expect oil supply to really be retarded. The fact that OPEC has not volunteered to allow more oil to flow is also a contributor to this level of oil prices that we are projecting for the September and for the June quarter. We assume that moderate downward pressures will start to emerge after September because these high prices are likely to generate a supply response, particularly from US shale. And so overall, as prices normalize post-September, we expect average oil prices in the range of $100 to $110 per barrel for fiscal year 22-23, which our forecast overall feels is about 40% higher than the previous year. Grains, I think the situation is a little more uncertain. They are projected to increase also from now until September in the context of continued demand, as well as continued constraint to supply conditions coming out of Ukraine and Russia. As we know, those two countries account for between 30 to 40% of global grain supplies. And so the conflict, as long as it continues, are going to continue to present upward pressures to these prices. We, however, think that grains prices, as the conflict normalizes, will start to come down. And as the crops that are produced in the Western Hemisphere hit the field, we understand that the prospects for those are good, that grains prices will fall. The upshot of all of this is that domestic inflation is likely to reach a peak, as the governor indicated, of between 12 and 15% in June, and thereafter it will start to decline. So we expect inflation, if oil and grains prices follow the path that we've just described, we expect inflation to go below 10% by the early part of 2023. The last bit of information I'd like to provide is that one way to evaluate the quality of the inflation forecast is to look at the month-over-month change in the index for the rest of the forecast period. And what we are assuming is that the heavy increases that we saw in 21-22 are not going to materialize or should not materialize in 22-23. Average change in the CPI per month is going to fall back from the 0.9 that we saw in 21-22 to a smaller number. And as long as that materializes, that should be enough to underpin a moderation in inflation. Thank you. Thank you, Governor.
Thank you for that very fulsome response, Mr. Stennett. Al, your hand is up. Are you able to ask the question this time?
Yes, I am.
Okay,
Governor, there's been a lot of talk about digital currencies, and you're no doubt aware that for, I'd say, over the last quarter or so, a lot of them have been taking a bit of a hammering. Bitcoin is down half its value, a load of them. And on the back of that, you're hearing people like Jamie Dimon, Charlie Munger, Andrew Bailey yesterday came out and said, well, look, there's no real value behind a lot of these digital currencies, but they have cachet, they're growing, particularly with younger people. They see it as an alternative. Is this just a temporary aberration given the climate we are in, and what do you see?
Well, I mean, the Bank of Jamaica is not in this cryptocurrency market whatsoever. As a person,
I'm aware of that, but it's a growing phenomenon, and it's
right.
It's a growing phenomenon.
So I was going on to say what we are developing is a central bank digital currency. The big difference being it won't trade in the way that a cryptocurrency trades on a market. So it won't have volatile value change as you get with cryptocurrencies. I view a cryptocurrency, if I could speak personally, as an investment asset. If you believe in it, you buy it, it goes up, you sell it, it comes down, you buy it again. That is what an asset and that is what a stocks act like, bonds also. So I don't see it as a currency. I see it as an investment asset. What we are developing here at the Bank of Jamaica is a currency, just like cash, except that it is digital and on your telephone or your point of sale equipment.
Thank you, Governor.
Thank you, Governor. Are there any other questions? Dashan, your hand is up.
Oh, sorry, I thought I'd bring it down, but I wanted to do a follow-up with Robert and or the governor about the inflation. And note, Robert stayed away from offering or proffering a point estimate for the second half, or at least a range for inflation for the second half, but he did say at least below 0.9 month over month. But does that take into consideration inflation that could come from the labor market in terms of it tightening? And the governor mentioned the 6.2% unemployment rate that we have now and further indications that we could be tightening in the labor market, at least from what I see. I may be wrong.
Robert?
Yes, thank you, Governor. Good point, Dashawn. I mean, we tend to present our inflation forecast in ranges, given the uncertainties, and take a look. I would encourage you at our quarterly monetary policy report. I don't think we build that very comprehensive document enough, so I would invite the media to download it from our website as soon as it goes up. I think it may already have gone, and the forecasts for the next 2 years are outlined in that report. But we tend to report a forecast range, and we tend to do it over 2 years, so you get an idea of not only the direction in which inflation is going, but also the range within which we expect inflation to fall over this period. The second part of your question, Dashawn, could you just remind me?
So I was asking if this forecast takes into consideration wage inflation. Yeah.
Right. The short answer is yes, but the qualifier is that there are always risks. So if you look at the FPP that the central government has published, it has already signaled its intention to increase nominal wages by between 15 to 20% in 22-23. So the bank's forecast for inflation automatically builds that type of dynamic into the inflation forecast. The risk, however, is that real wage increases may end up being higher, but the bank will continue to assess, and as long as we see pressures from the labor market emerging from the source, we will include it. But it can only be done when there are clearer signs as to how negotiations, not only in the public sector, but in the private sector, are emerging. So for now, we are treating additional wage pressures as a risk.
If I may, I have a comment to make. I notice nobody has asked about the exchange rate. Is it that this is not an issue anymore? It used to be that it was a major point of discussion. So the point I want to make is when you look back over the last 6-7 months, there's a relative stability in the market. Every now and then, Bank of Jamaica may intervene, but generally it's still the same market driven by private sector persons. But the monetary policies that we have put in, as well as our interventions, have moderated the volatility in that market. And I wanted to make the point, the nexus between our policy rate and the exchange rate, because I get a lot of comments that when we raise policy rates, this is going to mean borrowing is more expensive, businesses can't afford it. Well, apart from the point that Robert made well, that borrowing at 10, 12% is still less than what inflation is, and so very encouraging to business people. The point is that by making Jamaican dollar assets a little more attractive, if you have, let us say, and I don't know which of you, Dashan, Al, or Huntley, has $1 million to put on a repo at a bank. You may get 8% on it. Is it you, Dashan? You see, I threw my card in, I didn't call any phone. But you'll get your 8% from some of these institutions, which makes you stop and think, do I really need to go and buy foreign exchange and make a US dollar investment? Or am I not better off in this 8% Jamaican dollar repo? So that's the nexus between our policy rate increase and the stability, relative stability in the foreign exchange market. And as you know better than I, the impact of the foreign exchange rate on inflation is quite significant. And so in that sense, we have had a major impact on keeping the lid on inflation as tight as we possibly can. And that is why you find that the pass-through of international commodity prices is so high in the April inflation numbers.
Thank you. Go ahead, Al. You have another question, Al?
Can you hear me?
Yes.
Yes, we can hear you now.
Yes, Governor, you make a very good point there, and you're right. The FX market now it's kind of tranquil, and it's offsetting a lot of the tumult we're seeing around us. But let me ask you this: do you not think that, I mean, we're predicating oil at $67 a barrel, and given the point that was made earlier, around about $110, doesn't that serve to undermine what you've really established with the FX market?
Well, the cost of energy is a whole lot more than we would have expected a year ago. Yes, and we have had to step in and fund quite a bit of that. So part of the reason why the market's volatility is so low is that when JPS or Petrojam's demand for foreign currency really hits a peak because of the price of oil, we have had to step in and sell to them. So yes, I mean it's a big challenge to the country that oil prices are, almost double what we expected them to be a year ago.
Probably worth just emphasizing, Governor, that notwithstanding this shock to our imports, the bank still holds sufficient levels of reserves that has enabled us and will enable us to see ourselves through this rough patch. Our gross reserves is about 4.3, which is well above the international benchmark for adequacy.
Yeah, and just to add again, the remittances, whilst that increase that we experienced in the COVID days has flattened off, remittances still remain above the pre-COVID level, and that also is helping us significantly.
Governor, do you see any impact on remittances given what's happening in, say, our diaspora in the US, UK, Canada, inflation running rampant? Will people decide, well, look, if I was sending home $100, perhaps I'll send home 50? Do you see that?
Natalie, I believe Natalie Haynes is here with us. Maybe she'd want to address that question.
Hi, Natalie.
Good morning, Al. Good morning, everyone. Al, could you just repeat that question for me, please?
Yes, Natalie, I was saying, with our diaspora, do you see, for instance, say Auntie May, who lives in Birmingham, she'll send home £100, right? Given the inflation, what the UK is experiencing now, or whatever, Canada, Toronto, or New York, will people start saying, well, look, I can send home 50. I'd send home 100, but now I'll send home 50. Given what's happening, you know, with in their lives back in these economies.
Well, if we use the onset of the pandemic 2 years ago as a measurement yardstick, I would say persons still maintained and were sending even more through remittances, in particular from the US corridor and the UK to a lesser extent. So with Aunt May in the UK, you may see a slight fall off, but I'm not, you know, we have to watch the numbers. I'm not so sure that it will be commensurate with what is happening there.
Oh yeah, I think you may have a point, because you hear them talking, particularly the older generation, you hear them talking, right, in these markets. But it doesn't seem to deter them altogether. They still make an effort to say, okay, we'll send money home. They haven't said, well, I've heard them say, oh, well, electricity prices in London, for instance, gone through the roof over the last few months, food prices. But it doesn't seem the connection between folks they have in Jamaica, that's a bond that hasn't been broken. They still send money home.
Precisely.
But I just thought perhaps, yeah, I just thought perhaps because of what they're undergoing, they would send home less. But, you know.
Right. And remember too, remittances, yes, for support for family back home, but some of them also send money because they are doing economic activity here, like construction, whatever. Because most of them plan to retire here. So they send money in terms of constructing their homes and so forth.
Yes, yes.
Yes.
Thank you, Mrs. Haynes. We have a question from Douglas McIntosh. Is there any update on CBDC implementation?
Natalie, that sounds like you.
Yes, it does. All right, thank you. CBDC implementation is on track. Let me deal first with the amendments to BOJA that went to cabinet last week and has been passed. It's going to Parliament today. So that is on track. The minister in his budget speech in March had committed to have the amendments passed by the end of the first quarter of the fiscal year, which is the end of June. So that's on track. Secondly, we are in a phased rollout stage with one existing wallet provider, which is NCB. And through NCB,
Yeah, I'll be there in about 10 minutes. I'm still at the BOJ meeting.
Oh, we're hearing you.
Okay. Through NCB, the qualifying customers for the government's cash incentive of 2,500 that has been paid to qualifying persons, and the balance of persons that qualify will be paid at the end of this month. So by the end of this month, the full threshold of 100,000 customers will be met, and those persons will be able to begin transactions among NCB wallet providers by the end of this month, going into the first week of June. So it is on track. And for other wallet providers, we have 3 more who are to come into the sandbox to test. And by the end of this calendar year, we expect to have them on board along with others, hopefully. So that's the update.
Thank you, Mrs. Haynes. I see that there are no more questions. So I'd like to thank everyone for joining us this morning and for the participation in a fulsome discussion on the issues raised. Governor, would you like to have any last words?
No, nothing more. I think we said a lot. We'll see what the data brings in the future, and hopefully, fingers crossed, our expectation that inflation trends down in the next couple of months. We look forward to seeing that.
All right. Thanks, Governor, and thanks, everyone. Have a good day and stay safe.